A wonderful set of numbers reported by Anand Rathi Wealth. A sharp rise in profit as also top line, plus a 1:1 bonus is what we are looking at. And for all those people who are looking at outperformance, ladies and gentlemen, in the month of March, when the entire world, as also a large part of the Indian stock market ecosystem, was down in the dumps, Anand Rathi Wealth actually rose 25% in a single month to a fresh record high. Let me go through the numbers and then we'll speak with Mr. Rakesh Rawal, CEO at Anand Rathi Wealth. Net profit is up 40% year on year to 103 crore rupees. Revenue is up 29% at 288 crore rupees. EBITDA is down a bit, but there is also selling pressure, or there's also some pressure on the margin. To discuss this and a lot more, Mr. Rakesh Rawal joins us from Anand Rathi Wealth. Namaste Rakesh ji, a very warm welcome. Wonderful set of earnings, but a bit of a shadow on margin and operating income. Would you like to explain each one of them?
So actually, we had two, extra items in our P&L this year. One is that some investments that we had made, the fair valuation of that gave us an extra gain, and also the ESOPs given to management had a corresponding, expense charge to the P&L. So if we remove those two extra items, our revenues for the year have grown at 22% and our profits have grown at 29%, and our margins are completely intact at 43-44%. So the operating business is going well on stream to where it was, and it's been improving year on year, and we expect that to even become better in the years to come. So the total numbers are looking a little overshadowed because of these extra items.
Okay, wonderful. And you've also given a 1:1 bonus, so shareholders should be rejoicing at this point of time. Mr. Rawal, at this point, what is the geographical spread of Anand Rathi Wealth? Have you made any additions geographically in terms of newer cities? If yes, then what is, which are they, and when do you expect them to break even?
Well, we have about 18, 19 branches, and I think the most recent one was Mangalore that we opened, and we are looking at many more in the years to come. I think Patna should be next, and so on and so forth. Our fixed expenses are rather on the low side, and therefore when we open a branch, we make a profit even in the first year. So that's not something that worries me. But what worries me is that I don't want to open branches, in large numbers and and have a risk to my culture not being transmitted. So for us, our culture is very important, and therefore we proceed with caution as we go along and open branches, trying to man them with existing people so that the culture, value systems that we've built in our company over the years, that doesn't come under risk, and that sort of goes to that new center as well.
Okay, fair point. A prognosis on the market at this point of time. The reason why I'm shifting focus is that you are in a Goldilocks kind of a scenario. Business comes to you, you promised little, they stick with you, and that's visible in both the top line and the bottom line. So we'll pause the business discussion at this point of time, focus on the markets. What lies ahead?
Well, I think that whenever situations in the world go through some kind of challenge, what happens is that in the marketplace, the sellers are higher than the buyers, and therefore that gets reflected in prices going down. Yeah. And today, for example, we have our own mechanism of saying as to what is the fair value of the market. our belief is that the markets are 10 to 15% lower than fair value. Yeah. Because of whatever environment has happened. So the prognosis is that as and when things ease off in this whole environment, the discount that you're getting in the market will get, will get neutralized. And in a year from now, if we end the next year at levels of environment which are reasonable, then the profit growth of the company should get valued into the market. So our personal belief is that the market should go up very handsomely in the next 1 year.
Excellent. And how are you positioning long-term wealth creators, clients and customers portfolio in that thought process?
Beautiful. So as we've always been maintaining that our strategy emanates from the objectives for the clients. So for example, if a client has an objective of achieving 14, 15% return and he's happy with that, then with about 60% 0.6 beta, which is 40% lower risk than the Nifty risk, a mechanism of putting a certain proportion in mutual funds and some in structures gets us to that objective. And therefore, all clients' monies are positioned in that direction. So the new monies that we get during the next year or now will keep getting positioned in that ratio. And therefore, the probability of achieving that result of 14, 15 for clients, which with God's grace we have achieved over the last several years, will pan out. That's not to say, a word of caution, that every year you get that 14. For example, last year it was hardly a break-even situation for us, last financial year. But over a period of time, averages catch up.
See, the issue here is that the client should not be misled.
Yes,
and of course, we all know CAGR is something. CAGR is something that you get at the end of your investment horizon, and then you look back.
Absolutely.
It's not as if that we get 14% each year. We might get minus 14% 1 year and then plus 30% the other year, and then you sort of average it out.
Right.
That's understandable.
And
but
that's
what ahead for the business, Mr. Raval? Yes.
Sure. Sorry. No, I was saying that in COVID, during the COVID year,
what ahead for?
Sorry. Please carry on. I think.
Please continue, sir.
So in the COVID year, clients faced a
so you
negative.
are my senior. First, you go ahead.
No, sir, sorry. The portfolios were down 12, 13, 14%. So you're absolutely right. It doesn't happen year on year, but averages catch up. So that is the only point I want to make. Please ask your next question. I'm so sorry.
No, not at all, Mr. Raval. I wanted to understand what's next for the business in terms of pipeline. Are you adding more verticals to the existing offering, or what will be new for Anand Rathi shareholders over the next 6 months to 1 year or so?
No, I think it'll be more of the same. For example, we are hoping to add more RMs. We are hoping to open more branches. We've already got a platinum segment in place for clients who have more than 50 crores, and there is a clear-cut offering for them. We have initiated work on the gold segment, which is clients who have 10 to 50 crores with us. We will fine-tune this segment as we go along. In terms of products, we've always been open to new things, provided they serve a purpose. So for example, if I can get a higher return with the same 0.6 beta, I will use that product. Or if I get 14 at a lower risk of 0.6 beta, I will use that product. We are always in the market to look out for those options. If and when we find them, we will incorporate them. But merely incorporating a product which in our view doesn't serve a purpose, that we will try and avoid.
fair point. At this point in the market, of course, reward is more favorable in terms of deployment of funds. But just as a research that you might have done, what are the 3 or 4 funds which you feel at this point would be more beneficial in terms of wealth creation?
We have a set of 14 funds that we work on, and very clearly research has shown that which one will work best and which one there'll still be laggards in that, and every year there are about 2 or 3 laggards. It is extremely difficult to say. But if you have this combination, then more often than not, you end up with returns which are in the range of 3 to 4% more than Nifty. And therefore, I'm not going to second guess as to which is likely to do well. But I think that if you use this basket, then your objective of getting a higher return than Nifty in the range of 3 to 4 becomes on the high side. The probability of that improves. And I believe that investment is a probability game, So do action which increases probability,
Yes,
you'll end up
absolutely.
with larger values over a period of time.
Wonderful. Mr. Raval, on this wonderful thought process, we'll pause it here. As always, we've been interacting with you over the last 8-9 quarters, and it's always a great feeling speaking to you. Here's wishing you and your team all the best, and a wonderful journey ahead from a stellar one that's already on the charts and in the business. Have a nice day,
Thank you
sir.
very much. Thank you very much for having us, and extremely grateful that you could allow us this opportunity.